Nurturing. China tips into depletion as effort to strike recovery falter. Yes, great to be with you, Beth. It is. On the hand, people here are declining prices, and the rest of the world, of course, has been, better inflation as deflation. So, what's wrong with declining prices? Well, the truth is, deflation is just essentially the sign of weakening economy. Economists fear it because falling prices lead to lower consumer spending, which is a major component about economic growth. Of course, what China was really relying on to revive this economy this year. Increased consumption was supposed to be what drove China's rebound. Instead, we've seen that rebounds losing steam, and so this is just one part of the border slowdown that's causing stress for consumer investors and other market participants. What are the biggest sectors that are, causing problem, causing the lack of confidence? You know, this data on the consumer price index decline uh, comes a day after trigger figures and it proves both small in July, and it's also following a feeder of spurs more that trouble in China's giant property sector. So it seems that both consumer and companies are essentially holding cash rather than spending it or investing it, even with lower interest rates at the moment. So this is kind of broader challenge, but I think the biggest concern, of course, has been the stock market that we saw against six with another in-depth property developer running a trouble that kind of the property slowdown in the real estate sector remain deeply complicated in China. Yeah, of course, much of the world economy depends on a robust China economy. What could that flow and the effects be for a country like Australia? It's interesting because on the one hand, deflation is really seen often as an intensively local problem. The bigger challenge is that this kind of spreads off, particularly around oil prices or whether China undertakes stimulus measures that have would rebounding effects overseas. So I think that biggest concern more broadly. And I think, as you've seen before, if you look at the way China really led the recovery out of the global economic crisis in 2008, 2009, we know the back of Chinese stimulus packages we kind of all covered. We're kind of in course in the kind of the opportune situation right now, whereas China doesn't undertake the stimulus mission to kind of stabilize its economy as it goes into the second half of this year into 2024, it could spell trouble for the rest of us, including Australia, particularly obviously with importance China as trade partner for Australia. What is your sense of what Xi Jinping is going to do in terms of direction of the economy and trying to create this stimulus? Do you think that will be direction? Typically the combination of slow growth and this deflation period pedal the China is at the moment is trouble, of course, but the taxable response to both problem is stimulus, which is meant to, reverse spending, lift growth, and dispel the deflation. We have again seen though, commentator and economist is feeling that China is not doing enough in the right direction on stimulus. So while you have seen some unit measure, for example, making it easier to sell all the appliances or keeping amusement parks open later to try and boost consumption. There seems to be this idea that you need to reinflate the tire through the punctual hole which around consumer spending. We are the sort of kind of the public tools in box and China could draw on. And we've seen so far though, for example, we haven't seen fiscal easing, which might kind of stabilize employment or improve incomes for private borrowers, kind of revive the feeling of economic insecurity there plague China right now. So I think that's why people are kind of holding there for not what new measure we see, and they are not just pure supply side. What China wants, of course, in the long term is to promote, and this is a priority first, is paying high quality growth that is innovative, well paid, green and resilient rather than kind of low quality growth spending on redundant infrastructure, cheap manufacturing, or speculative home building. The truth is reform and stimulus don't need to conflict. And so if you see, for example, investments in green infrastructure or, for instance, flood prevention, that might kind of get boost demands. China also since time adapt to changing environment. So I think back those are area people are looking at now, can't do the both at the same time. What to make a move by US to towards tech company investing in China? I think that's part of very long and complicated, way in which the US-China tensions have come down to be squarely focused just on technology. And it's understandable because we are offering environments no trust in trade relationship or very limited trust in the relationship more badly. The regions of China, for example, think of high quality growth as being something focused innovation in critical technologies because that is future. That's what we're trying to unlock. Where you're Australian, China, United States, whatever kind of gets the best tech first, it's going to kind of winning globalization 2.0, so to speak. And if you don't trust that the technology will be not be used in the way it's not intended, it's impossible to trade in those areas. And so this is just get another effort, I think, by the United States to protect its core interests and national security interests. And I will not surprised if we don't see a quarterly or quarterly response for China. They are both been operating the way. Yet in the sort of perhaps, predicting some of the very important Earth monitor and stuff that the China have in space. Good to see you as always, Mary. Thanks for your time. Thank you. One more. Yeah, great to be with you, Beb. It is. On the one hand, people hear declining prices, and the rest of the world, of course, has been, as battling inflation or stagflation. So what's wrong with declining prices? Well, the truth is deflation is just essentially a sign of weakening economy. Economists fear it because falling prices lead to lower consumer spending, which is major components of economic growth, and of course, what China was really relying on to revive its economy this year. Increased consumption was supposed to be what drove China's rebound. Instead, we've seen the rebound losing steam, and so this is just one part of broader slowdown that causing stress for consumer, investor, and other market participants in China. What are the biggest sectors that are, causing problem, causing the lack of confidence? This data on consumer price index decline. Consumer day after trade figure also show exports and imports both spring and July, and it's also followed a space of reports about more debt trouble in China's giant property sector. So it seems that both consumer and company are essentially holding cash rather than spending it or investing in, even with lower interest rates at the moment. So this is kind of a broader challenge, but I think the biggest concern, of course, has been the stock market. We saw an August fix with another indebted property developer running into trouble that the kind of the property slowdown in the real estate sector remain deeply complicated in China. Yeah. Of course, the world at much of world economy depends on a robust China economy. What could that flow on affects the country like Australia? It's interesting because on the one hand, deflation is really seen often as an intensely local problem. The bigger challenge is that this kind of spreads out, particularly around the oil prices or whether China undertakes a stimulus measure that will have rebound effects overseas. So I think that the biggest concern more broadly, and I think as we've seen before, if you look at the way China really led the recovery out of a global economic crisis in 2008 2009, the back of Chinese stimulus packages, we kind of all recover. We kind of in the kind of opposite situation right now, where if China doesn't undertake the stimulus mission to kind of stabilize its economy as it comes to the second half of this year in 2024, it could spell trouble for lots of us, including Australia, particularly obviously with impulse of China as a stress partner for Australia. What is your sense of what Xi Jinping is going to do in terms of the direction of the economy and trying to create the stimulus? Do you think that will be the direction? Typically the combination of slow growth and this deflation pedal that China is at the moment is trouble, of course, but the textbook response to both problem is stimulus, which is meant to, reverse spending, lift growth, and dispel the deflation. We have again seen though, commentator and economists feeling as though China is not enough in the right direction on stimulus. So while you have seen some units measure, for example, making it easier to sell old appliances or keeping an amusement park up later to try and boost assumption, there seems to be this idea you need to reinflate the tire through the function hole, which is around consumer spending, when there are also kind of other policy tools in the box that China could draw on. And what we've seen so far though, for example, we haven't seen fiscal easing, which might kind of stabilize employment or improve the kind of private borrowers, kind of revive the feeling of economic insecurity they are plaguing China right now. So I think that people are kind of holding their breath for down the line to see what new measures we'll see that are not just purely supply side. What China wants, of course, in the long term is to promote, and this is a priority for Xi Jinping, high quality growth that innovates, well paid, green, and resilience rather than kind of a low quality growth spending on redundant infrastructure, cheap manufacturing, or especially whole building. The truth is, reform and stimulus don't need to conflict. And so if you see, for example, investments in green infrastructure or for example, flood prevention, that might kind of get boost the demands and help China also at the same time adapt to changing environment. So I think that those are area people are looking at now, can't do both at the same time. Yeah, what to make of move by US to towards tech company investing in China? I think that's part of a very long and complicated, way in which the US-China tension have come down to be fully focused just on technology. And it's understandable because we are offering environments of no trust in the trade relationship or very limited trust in the relationship more badly, or the reason that China, for example, thinks of high quality growth as being something focused on innovation, critical technologies, because there is future. That's what we're trying to unlock. Whether you're Australia, China, the United States, whoever kind of get the best tech first, it's going to kind of win in globalization 2.0. So, and you don't trust that the technology will be not be used in a way it's intended is possible to trade those areas. And so this is just another effort, I think, by the United States to protect its core interest and its national security interests. And I will not be surprised we don't see a quality response for China, therefore operating this way. Yes, indeed, and through perhaps prohibiting some the very important earth mineral stuff that the China have in space. Good to see you as always, man. Thanks for your time. Thank you.